GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's like a slow cooker. Set it, forget it, and come back and hope for all-time highs. I'm your host, Jay Hamilton. It's Monday, August the 25th. We are not getting all-time highs so far today, but things are looking really good. And really what is happening right now is so interesting because we have institutions here in a big way that we've never had before, which is driving real meaningful flows for the majors, Bitcoin, Ethereum, Solana. We have some news about Solana getting more action and excitement around treasury companies. Obviously, we've talked lots about DATs on the Ethereum side. Today's episode, we're going to dive into how institutional flows are unfolding, where the demand and the supply dynamics are playing out, and what, of course, the next big edge is for you as an investor. We're going to talk at the end about crypto and AI, some interesting conversation there, and also institutional grade alts, why you need to be looking at alts that are made for institutions and that support the institutional DeFi. We're going to dive into all of this today with Jason Urban, the now head of global trading at Galaxy, previously Goldman Sachs. If you guys don't know Galaxy, they've got $9 billion in assets, 1,400 institutional clients, 1.1 billion loan book, and they also run a large AI data center down in Texas. We're going to talk a little bit about that at the end. They're one of the world's largest liquidity providers that's bridging Wall Street into the crypto frontier. Before we jump in, I was telling you guys this last week. I'm so excited, and the team is so pumped. We just launched a new website, milkroad.com. Is brand spanking new, fresh milk for you guys. And to celebrate, we're giving you a discount on Crypto Pro and All Access Pro. So hit the link in the show notes or just go to milkroad.com yourself. Check out the new website. Let us know what you think and get yourself some of that great, sweet discount. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. Also brought to you by KGeN, the verified distribution protocol, changing the growth game. With that, Jason, welcome to the Milk Road Show.
Hey, thanks for having me. This is great.
Pleasure to have you, my man. Really is a pleasure. Okay, before we jump in, I just want to give our audience, you sit in a very unique seat at Galaxy, and Galaxy sits in a very unique seat. Can you give us a quick overview of what Galaxy does so our audience understands and what your point of view on the crypto market is?
Yeah, absolutely. So the best way to think about Galaxy is, traditionally as a merchant bank or an investment bank inside of crypto dealing with, institutional client base. Obviously, with the growth of our AI business, the best way to think about us now is two firms under one umbrella where the intersections make sense, in that it's digital assets and AI. On the digital asset side, we're really doing everything that there is to do in crypto. I always jokingly say that the strength and the weakness of Galaxy is that we do everything in crypto. So we have a markets business, which is where I sit, which sits on top of all the liquid things. That's the lending, derivatives, spot, on-chain, things that you would think about broadly as markets. And we're dealing with institutional client base. We have an asset management arm that does things like funds, managing client flows. We were the advisor on the FTX estate. So they're doing asset management regulated things. And then we have an infrastructure business, which was actually the birthplace of AI because we were a large crypto miner. Now we're one of the largest validators, say on the Solana network and Ethereum, in a lot of the proof of stake chains as well. And we have a custodial tech business called GK8 that we bought out of the Celsius bankruptcy. So we really are doing everything, full stream from maintaining, people's, security networks with inflation and our validating to you want to buy 5 Bitcoin. We've got somebody working the telephone, 1995 style sometimes, depending on how clients are coming in. Saying, hey, I need to buy five corn. Where are we? So we do a little bit of everything. And that, allows us to get a really unique perspective of the ecosystem. We're seeing everything.
Yeah. I mean, you recently, in the last few months, were part of the large whale that sold 80,000 Bitcoin. So that was led by Galaxy. News, or I don't know if this is news or speculation, came out. I believe it came out yesterday that you're involved in a Solana digital asset treasury looking to raise $1 billion there. So there's just to give a couple of the recent headlines of what you guys are involved with. As you said, you truly are involved with everything, which is why I'm so excited for this episode. Let's, before we jump into specifics, give us your let's say we're sitting down for beer at a bar, we're buddies. What are you telling us about the crypto market right now?
I think that you're at one of these great turning points right now where you're starting to see that institutional, flavor coming into the market. Now we've been saying that, and it's interesting in a business like Galaxy's, it's always kind of a little bit be careful what you wish for. During some of those crypto winters, you're like, if we could just get some institutions in. Now they're here, and I'm looking at my loan book, and I'm looking at my derivatives business, and I'm looking like, yeah, they're here, and they're going to be knocking on that door. Like all of a sudden, you want them to come to the party, and then you're like, who ate all the pizza? So you are, but we are seeing that turning, and I think you're seeing it manifest itself in a couple different ways. One, the DATs, the digital asset treasuries. That's certainly something that, while on the surface you might look at it and say, why do I need, if I already want to own Sol or ETH or whatever, why do I need this? Well, when you think about institutions, they need to be able to put these things into boxes that work for them, right? They already have prime brokerage agreements. They already have future agreements. They don't need to worry about not your keys, not your coin, if it's in that kind of a vehicle. And so it makes it much easier for those players to step into the ecosystem. And so that part of that is that regulatory clarity that we're starting to get. And there's more work to come, but it de-risks it, right? For a lot of us who have been in this space for a long time, we understand these things. But for some of these people who were probably skeptics at some point, and now you're going to say, well, you have to worry about custody and how many confirms on the blockchain. And they're like, what are you talking about? And we're able to say, hey, you're just buying a vehicle no different than you'd buy shares of Apple or Amazon or whatever, right? And so and I think that makes it easier for them. And that truly is how you start to get orange pilled. You get into the game, and then you're starting to look at the things that we all already know are valuable and say, hey, this is actually smart fiscally. This solves these problems that we've seen out there in traditional ecosystems. And so as we start to kind of play through that, this is where, you're at that great turning where it's like, shoot, these guys are coming and they're for real.
Mm-hmm, mm-hmm. It's interesting that I want to just kind of get your view on the way getting orange pilled works for institutions, because on the retail side, what we see is very different than it is on the institutions. On the retail side, people often come in because of the attention economy. They come in because of some meme coin, some cultural thing that's happening, and it comes across their TikTok, and this person's getting rich and making money. Okay, I'm going to come in and do it as well, right? Very different than the way institutions. Give us what's the typical flow of the way institutions come in, and maybe you could also tie in a little bit about who is coming in on the institutional side.
Yeah. So here, there's push strategies and pull strategies, right? And like anything, like any marketing attempt. And so there are times where I feel like we historically have been pushing, dialing for dollars, call these fund managers, call these financial institutions, call these banks. And we were pushing, and it was kind of like, it's kind of like selling sand at the beach. Yeah, great. Thanks. Look where Bitcoin is, 35,000. Call me later. Now we're at a pull stage where everyone is calling and saying, how do I do custody? How do I think about liquidity provisioning? How do I think about derivatives? What's the same from the world that we're coming from, and what's different? And how do I solve for what's different? I think that it's been de-risked from a career perspective. If you're a money manager and you've got a great little business, why would you change that? To put your clients or put your investor base. Now the investor base is clamoring for it. I think the administration change. I think that the regulatory clarity that we're starting to get. I think that's a big thing. When we didn't have clarity, it was like you were trying, yeah, you're going to be okay. You're not, and they're like, well, wait a second, do I have to worry about this? And now we can point to it and say, no, here's the defined rules. Here's how it's going to work. Here's the deck that's been cleared. And now you're able to hold this on balance sheet without it being punitive. You're able to transact in these things without it being, seen or viewed as money laundering or some violation of OFAC. And so that is really pushing it. And who's coming? It really is everybody. And I know that we hear that, but you've got the big banks who, are traditional players, the white shoe firms. You have GSIB organizations who want to deal with custody. I think stables and stable coins have changed the way these places start to think about it. So in the stable world, you're going to have the GSIB custodial banks. I think in the more liquid things, you have some of the larger banks that are just not quite sure how to get there yet. But on the asset management side, you have all of these people who are like, I need to have the next name. I can't be on the outs. And so you're starting to see those people come in as well. And the combination of all of that together really paints a great tailwind for the industry.
And what are they buying? Are they coming for
I mean,
Bitcoin? Are they coming for Ethereum, for Sol, for down the stack?
It's the same story. So I always jokingly used to say it takes about a year to convince a large institution to get into Bitcoin. And then it takes 6 months to get them into ETH Sol. And then it's like 3 months later, somebody on the desk is calling and like, explain this DeFi thing to me, And so like, I think you're seeing a similar trajectory. So right now it's certainly Bitcoin. I think that the DATs have really put a spotlight on ETH. That I think a lot of what I'll call the crypto natives or the degens were like, well, there's issues with this and issues with that. They're coming in and saying this thing's, look at the stable coin flows. I think Tommy Lee's done a great job getting out and kind of evangelizing that story. And I think now you're starting to see other stories come. The DAT universe is very interesting because if you think back to the old regulatory regime, nobody wanted to be a company. Everybody needed to be a foundation so that you weren't a security. And now that you heard Sachs the other day say most of these cryptos aren't securities, right? Where you've now the pendulum has swung, but you can't put that foundation genie back in the bottle. That exists, and it's disingenuous to say, oh, well, now we're not a foundation. But you can spin up these digital asset treasuries that start to look and feel they should be working hand in glove. I don't think they're necessarily a puppet for the foundation, but a partner to the foundation. And so if there are names that are, if there are companies that are winners within the names that people like, they're going to naturally work with the foundation. We want to roll out this protocol change. How do we think about this? I think that works hand in hand. And so, that will also, that helps bridge it back from what I'll call TradFi back into crypto, where you can start to talk about, if you're Solana, what's the SIMD that we're going to do because inflation matters, and you have these vehicles that are going to hold large amounts of it. It starts to kind of gel a little bit.
Mm-hmm, mm-hmm. Where are we in that? You mentioned those, it takes a year to convince an institution to do Bitcoin and 6 months for ETH. Like, where, I know every institution is obviously at a different point in that spectrum, but can you generalize or give us?
We're still pretty early. There's still a lot of runway. You're seeing fast money that's come in, but you haven't seen, you've seen people dabble, but they haven't stepped in. You're like, oh, you did, for a large institution doing 50 million of something is a dip your toe, right? And you're starting to see a little bit of that where, bringing real size to bear is going to come. And it's just a matter of, okay, let me get a few reps under my belt with, $50 million in and out transactions that way. And then pretty soon one day you're going to wake up and you're like, whoa, that thing just moved. Yeah, well, XYZ just bought my yard arm of it, and, God help us all.
Is there is it just time that is needed in order to get to that, go from, experimentation and taking small bets in order to be ready? Or is there a catalyst that needs to happen? Further, any regulatory or anything there?
I think regulatory, like we're starting to get clarity and we're starting to get rules, SAB 121, being put on the back burner. Those things help. I think that once you get definitive, and you need to have a little bit of a catalyst. So if we enter into an easing cycle with the Fed and people are looking at that, okay, what does that mean for the dollar? And so the macro minds that think of things that way are going to say, oh, and now you have a regulatory backdrop that allows that, or at least is less murky. I think that you'll get a geopolitical markets catalyst that will put pressure, and they'll force their organizations to pressure test what they know from a regulatory perspective, and I think that will plow through. But that's also a little bit of time. It's hard here. I mean, I've this will tell you where we are as an ecosystem. We've worked our tails off all August, and everybody that I talk to, and mostly I would say if you're talking about Europe or Asia, where vacations, August is like everybody's plowing right through it. So, Sunday calls, all that fun stuff. So
really, okay, so that's different than now. Is that a crypto thing? Is that because you're in crypto? Are the TradFi institutions working in August? It's a crypto thing.
It is all the crypto people, because there's all this treasury activity. There are everybody's jockeying, and you're getting price action. I mean, you're seeing us ramp up, you're seeing us sell off. The moves are, I don't want to say they're violent, because they're not that violent. They're just a little more extended. And so, one, you've got eyeballs. It's what we're finding is we get periods of intense action followed by everybody's like, supposed to be on vacation with my family. All right, let me go see a little Sally swim in the pool, and then you come back. And so but it's been intense.
The best audience to distribute your product to? Your super fans, duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Okay. Which to me would say, and what everyone's trying to figure out right now is at least all of our listeners, and I'm sure you are the same in your role at Galaxy, is where are we in this cycle, and where are we going for the rest of this year and for the next year? Typically we've been following this 4-year cycle for several turns now. And the initial thought coming into this year was that, okay, the cycle is going to go until the end of 2025. A lot of people really bought into that thesis. I don't think a lot of people predicted the sell-off and the dip we would have around tariffs, but now we seem to be on the way back up. Do you have a thesis around how you think the rest of this year plays out?
I think we're gonna be strong into the close of the year. I think that it's going to be driven by things outside of crypto, to be honest with you. I think it's going to be, you've got a midterm election coming up. You've got an administration that's not afraid to act quickly or boldly. And that's going to, there are going to be things that are positive, or a positive backdrop for crypto that come out of that, whether that's the interest rate environment, whether that is things that we're going to do from a stimulus perspective to try to ensure that the administration's on good footing going into midterms. I just think that's a catalyst for broad markets. Even though it does feel a little extended, we've been on this run, and if you step back and look and squint at a 10 or 20-year chart of the S&P or any other asset for that matter, it's kind of like a straight line, and So as you think through that, there's that element. Now, that being said, you've got you've got the potential for some black swans out there, whether it's geopolitical, what's happening in Europe with Ukraine, what's happening in other parts. I know that Trump is pushing hard to to end wars and be and do political things there to cement his legacy, but whether he's going to be successful or not, that I don't know, and I don't know what's going to rise out of that, right? And so I think when you look back, the fact that he's been as active as he has, I think tells you that that's going to ultimately be a great tailwind for crypto.
Mm-hmm. Mm-hmm. Yeah, certainly. And we've got it's just while you're bringing up Trump, World Liberty Financials, TGE is coming up in the next month or so, and we got them coming on the show next week, so we'll be breaking that down as well. I want to talk about a concept that I've heard you discuss a bunch recently, which is focused on. I want to focus on Bitcoin for this, but it does extend to other tokens as well. This one of the big impacts of institutions coming into the space is we're moving from weak hands to stronger hands. We're seeing at scale, at bigger sizes. What talk to us through what that means for markets and price of Bitcoin and this move from weak hands to strong hands?
Well, I mean, it's certainly going to be a volatility muting event, right? Like you start to see that, and I think you're going to start to see that. When I got into the industry, Bitcoin's realized vol, if you're just doing the math, is 70 to 100 type area, right? Depending on the environment and the particular window you pick. I mean, now we're seeing it in the mid to high 30s, right? And that's on pace with oil, right? And so as you look at something that's going to become more held in people's portfolios, whether that's 401ks, whether that's asset managers, you're going to see, I think you're going to continue to see volatility, both from an implied and realized perspective, contract. And it starts to look and feel more like a normal asset. And not, again, as somebody who spent the last decade doing this, I don't want to say normal asset in a derogatory way, but in a way that says a little old lady in Omaha should have a little bit of this in her portfolio. Maybe not, coin number 237, but something that has that serves some of the purposes that we know that Bitcoin and other cryptos serve.
When you think about volatility, what do you think we see first? Do you think we're more likely to see below 80K first or above 250K for Bitcoin?
Oh, well, I mean, 80K is, they're like 250K is rare air. I think you've got a chance to see 80 first, only because you hit an air pocket, a liquidation on a Sunday at 2 a.m., no bids. I think you're more likely to see that than you are, there's always some seller that'll come out of the woodwork, in some rare air. So,
which is basically what happened yesterday, right? Yesterday, a big Bitcoin whale came and sold. I don't even remember the number, but it was something like 300 million, I think, of Bitcoin. And it obviously pushed the price down. I wouldn't call it a crash or anything like that, just an adjustment as a result of a lot of selling pressure and you do still have those large holders from the early days. We are seeing more and more of them come out, but it still has the opportunity. I just don't know we'll see where we go from here. It feels, I don't know if we ever see below 80K again. I'm not convinced that we ever go that low again.
Oh, I'm a markets guy. I think there's an old saying that all prices will be met. It's just a matter of when and how. And granted, as somebody that's given their life to this, and I certainly, my heart says I'd like 250 before 80. My head tells me that you hit a couple of air pockets and a couple forced hand. That part of the problem, and I say this in a positive way, but it's a reality. Part of the issue of bringing in institutional money, is there are times where people's hands are forced. If you're at a large institution and prices are rolling and risk mandates, change, there's sell at any price. Where I think if you're looking at traditional holders inside of the Bitcoin ecosystem or others, like, listen, I liked it at 20, I liked it at 40, I liked it at 80, I like it at 120. I'm not selling at any price. I'm riding it to its a million or whatever that is. Mm-hmm. You don't have that in the institutional world. Those players have to behave and act in a way that is a function of their charter, fiduciary responsibility, et cetera. And so in those air pockets, you can see a little bit of that. That doesn't mean it stays there, but it just means that you're changing the complexion of the market microstructure. And as you do that, that comes with a lot of positives, but there are a few negatives as well.
Mm-hmm. Mm-hmm. Yeah, it's a great point to point out. Who's buying? Let's talk about ETH and Sol now. We talked a bit about Bitcoin. Mm-hmm. Who's buying ETH and Sol right now?
I think that you're seeing a lot more institutional buyers, to be honest with you. And the reason you're seeing that is nobody wants to buy somebody else's bags. Now, as a crypto native, you're moving way down the chain when you don't want to buy somebody else's bags. But that, to a money manager somewhere, that starts to look and feel a little bit like gambling and less like investing. But I think that with these, what I'll call the, ETH, Solana, et cetera, down that chain, there are a lot of great projects who are solving real problems, and people are like, I'd like to have a shot at my Bitcoin, my Bitcoin bag. And so I do think you're seeing some institutions step in there. I think the treasuries obviously play a role in that because it's either direct or indirect buying pressure, but it's real. And I think you're going to continue to see more of that as time goes on here.
Can you make any comments on this speculation that Galaxy Jump and Multicoin, that you guys have partnered up to start a digital asset treasury, a DAT focused on Solana?
I have to be careful as to what I can say. I can say this: that Galaxy looks and operates, as we said on the onset of this conversation. We do everything in the ecosystem. We have been in parts of our business, and if you think about an investment bank, there are always areas that are walled off. We've been an advisor, been a trading partner, et cetera, to a lot of these. We've seen what works and what doesn't. And, we're always open to exploring ways to, help our clients and help ourselves monetize that experience. And that's as political as an answer as
your compliance officer is going to be pumped about that answer. You just nailed that.
Might not be, but it's the best I can
do. We've talked a lot about Ethereum recently. Everybody is talking about Ethereum. It's been Ethereum's world ever since the digital asset treasuries popped off about a month ago, and it's been all anybody's talking about. But Solana there's nothing's changed about Solana. It's not like we've talked less about Solana because there's anything wrong with Solana. And Solana has some digital asset treasuries, but not to the scale that Ethereum does. And it feels like Solana could have a similar moment around digital asset treasuries where there's a lot of activity happening there. Plus, we also saw VanEck just filed for a Solana ETF with staking. So you could buy an ETF on Solana with Solana and get 7-8% yield from that ETF. It feels, I don't know what your thoughts are on Solana, but it feels like it could have a little bit of a swing back as it catches more of the narrative and more of the media attention in the same way that Ethereum has. Do you think the same, or do you think that Ethereum continues to dominate the airwaves?
Here, I do think that you always see in crypto, it's always rotations, between, hot hands, good narratives, good projects, good rollout. You've certainly seen a lot of, the magnifying glass put on Ethereum, and partly because you've had some good storytellers out there telling the story. I think that with these DATs that are continuing to come out every day, every week, you're going to have more storytellers. And I certainly think that you're not wrong in saying, there are certain places where the spotlight has been shined and certain places where it hasn't. And there's a great opportunity. To shine a spotlight on certain things.
One thing that I know that Galaxy really focuses on in your seat is the institutional grade DeFi protocols. So and this is something that we've talked a lot about at Milk Road, is there is, as more institutions come into the space, they're not just going to come in and hold spot, they're also going to participate in DeFi. There's a big opportunity to find those tokens, identify them, and focus on those as part of your investment strategy. How do you at Galaxy, how do you think about what is institutional grade mean to you?
I mean, it's interesting. We're probably one of the largest, if not the largest, DeFi player, and we don't ever talk about it. But partly because, we are helping our clients, and therefore sometimes that means discretion is important. I think that's something that we've proven time and again. I think the important things as you think through that, and I agree with your thesis or your premise here that there's going to be a natural flow there. I think what's important is understanding the projects that have availed themselves to institutional focused things. How do you handle AML KYC? In a pool, you really can't KYC the other participants, but you can certainly AML them, and you can certainly look at wallets, and you can certainly, attach scores to pools. And so, protocols and projects that are making it easier for institutions. I don't think of a Galaxy as an institution because we're pretty crypto native, but think of a Goldman or a Morgan or somebody who's stepping in, and how are they going to feel putting $1 billion of money into something? And are they going to feel comfortable when the regulator comes and knocks on the door and says, hey, what did you guys do appropriately? And if because of the way that the protocol is constructed, they're able to say, well, here's what we did. And here's how we know we weren't laundering money or acting with bad nation states or criminal elements, et cetera. Here's what we've done. And here's what we did on top of that to further enhance that. And that's why we felt comfortable putting our money there. And that's something that we do a lot of at Galaxy. And that's what we see a lot of these institutions come to us and say, how do we do it? Right? The easy answer is, okay, you lend me money and I create a TradFi product that looks, okay, it's going to match this reference rate. And so therefore you're getting the yield. Like that's the first step, which it's still, the money still ends up in the right place. But the next step is when they're going direct.
And will they go direct?
They're going to have to progress.
Yeah.
I drove my car here today. I didn't walk and I didn't take a horse. I took the most efficient way to the path.
But the incumbents are, maybe you're driving a gas powered car because every car company is still pushing, the gas powered cars, not the electric cars, other than Tesla. Like there is this, aren't the banks going to try to own this still? They still want to own the flows, and they're going to say, hey, use our product.
Like here, I think that any business manager, whether it's the guy on the corner bodega, or if it's, one of the largest companies in the world, has to think about, how do I defend what I've got and how do I evolve in a way? So you're going to see both. You're going to see them, I don't like to malign anyone, but you've seen some of the larger CEOs of banks in the world who are very publicly down in DC saying crypto is worthless and it's nothing. Meanwhile, behind the scenes, I can tell you we're having conversations about, hey, how are we going to do this? And how do I do that? And how should I? So they're going in both directions. Mm-hmm. So I think you're going to see the same thing. Yes, there is definitely a cohort of people that are incentivized for everything that we've put our lives forward to do to fail. But they also are hedging their bets and saying, you know what? Maybe this DeFi thing isn't so bad.
So is there any particular protocols that are or blockchains that are well set up that you find that in your seat the institutions like, that they trust, that you guys trust? And if you don't want to call any particular protocols, are there maybe factors that you see over and over again within these protocols?
I thank you for giving me the easy cop out on the side there. I'll say this: we are based on what we do. We are a partner to a lot of protocols, and so I'm always hesitant to call out any given because I have a large client base, and I'm going to get a call from somebody tomorrow. Oh, you didn't mention me. So I always have to be careful. I'll say this: things that networks and projects that allow for speed and scalability. That's very important. How big can you get? I mean, how many transactions does Visa do a second, right? Why does Bitcoin not work at 7 transactions a second without getting into Lightning and side? Like people think about that. And you have to remember that while you and I and most of the audience here is fairly well versed in all these things, I still have conversations weekly with people that spell Bitcoin with a space. And so, so there are buzzwords that matter, right? Throughput, AML, KYC, those type of things that focus on that and say, here's what we're doing so that it isn't just a bunch of our buddies getting rich, but it's actually we're building for the future. I think that that's important. I think that that's one of the things, to take it back to the DAT conversation where you look at foundations working hand in gloves with public vehicles, it has to be more than just a wrapper that holds an asset. There has to be underlying businesses, whether that's staking, validating, whether that's, building, et cetera. As you start to go down that path and you start to kind of look back and say, oh, that's a real company, right? As opposed to, oh, that's just a thing that holds a thing. And maybe it's better because an ETF can only stake 75% of the assets and a treasury can stake 100. Just, ETFs have to be prepared to do recalls and what's unbonding.
Yeah, 24-hour recall is not easy when you're talking about a
especially when
your
unbonding period is anywhere from 1 day to 1 day to unknown to well, how do you do that? I mean, that's one of the services we offer is like we'll give you instant liquidity and we'll deal with the back end, but even then there's a limitation to what we can do in working with these to help them with that.
It feels like, and this is like this overarching feeling that I keep getting so much right now is we are still so early. You said this yourself. And if you're an investor and you've been here for a while, the worst thing you can do is try to over engineer it. And really, you just need to be patient because maybe whatever token you're holding is not moving fast enough and it's not at all-time highs yet. But when you sit back, you look at how early we are and all these institutions are coming, they all want to be here, and how they come will differ. And maybe it makes the public companies stock price go up as opposed to the tokens price go up as much. But if you're just patient, everybody is going to win here. I think it is so inevitable.
A rising tide lifts all boats, and that is what is happening. Yes, there are going to be some monstrous winners and monstrous losers in any process. Like if you think back to the internet circa 2000, there was a pets.com and AOL, and there was a Google and an Amazon, right? Like that happens, right? And so you're going to see some of that happen. But broadly speaking, if you were and have been invested in tech throughout, the change has been, life altering, right? And so I think you're going to see the same thing in crypto. I think you're going to see people who are going to build things, change things, in a way that revolutionizes finance. So much of crypto is about democratization of finance. Like that's what we're going to see. Like the reality is at some point, Galaxy shouldn't be a thing. It should be in the hands of each person. I believe that with all my heart. However, there's a long time for that, where that starts and where that ends. But that's, like a lot of things are going to happen in the interim.
Yeah. When we talk about exponential tech, obviously most people listening to this show are focused on crypto, but everybody knows that AI is the other exponential tech. And I can't forget to bring up AI in this conversation as well, because Galaxy is a large player in AI data. Talk to us about the shift. For those who don't know, you have a a site down in Texas that used to be focused more on crypto mining, and you have since shifted its focus to be on data storage, AI data storage. Talk to us about this shift and a little bit around the convergence that you see coming between crypto and AI.
Yeah, absolutely. So, I mean, obviously, AI is playing a greater role in all of our lives, and we can debate the merits of that or where that ends, or how much is too much. And I'm sure that's for another show and definitely another guest, because that's not my strong suit. What we've done, and Galaxy is a forward-thinking organization. Our job is to look at what makes sense for our clients, what makes sense for the future of our company, and where we see finance and broadly the economy going. When we started to really build out and focus on our crypto mining arm, we had a facility, or have a facility, down in Helios, Texas, and the convergence of opportunity, where we were in the build, where we were in terms of power contracts and everything else, made it pretty apparent to us that we had a great opportunity to pivot into that. And while there was a lot of consternation internally as we talked through, does it make sense because of supporting the infrastructure of the blockchain and proof of work and subsequently proof of stake, how should we think about that? And it didn't mean that we were going to stop that. It just meant that we were going to focus these large assets in a direction where, quite honestly, our shareholders were going to benefit a lot more. What's interesting is, as we continue to go down that pathway and we think through, some of the intersection points. One of the things that we talk about, broadly in society, deep fakes. How do you stop, somebody from doing that? Well, you've got this immutable blockchain where you can now, somebody will figure out a way to ensure that what I'm seeing on television or what I'm seeing on a podcast or wherever is coming to me as a genuine, authentic version of myself, as opposed to something that a political enemy or somebody tried to whip up. And so, there's the markets elements of it. As you start to think about whether it's robo advisors or portfolio construction, AI will change that, and that will change crypto, but it also won't change the innovations that people are seeing. And so I think we're a long way before our AI overlords take over. I think it's only going to enhance and speed up the cycles. So you'll see progress faster.
Mm-hmm. Mm-hmm. Yeah. Final question before we let you go, Jason. We're at about 4 trillion in crypto market cap today. Where do you see us going 5-10 years down the road?
Oh, I mean, here, I in my heart of hearts, I believe that everything with a CUSIP, which is every financial instrument in the world, for those who don't know, have a CUSIP attached to it. Everything with a CUSIP will end up on the blockchain. Now, the opportunity set, I think, is how those play together for a period of time, right? You'll have shares of Apple that trade on, a regulated exchange, say in the US or any other country. You're going to have tokenized versions of it on each of the chains, potentially each of the chains in different jurisdictions, the myriad of things to trade. And to, quite honestly, it's going to be a Cambrian explosion, and then you're going to start to see everything drift back to what I think is the right place for it to be, whatever it is, right? But I think that where you see us in 5 to 10 years it's going to be enormous. I think you're going to look at all the other markets and say, we've now consumed the bond market, we've consumed all the municipal finance, we've consumed all the equities, we've consumed all the commodities. And then you're going to look at it and say, oh, and that's all tradable with Bitcoin and ETH. And some of it's on ETH or Solana or whatever. You're going to start to see this, it's going to change. And that's the exciting thing of why I wake up in the morning. I'm jazzed to do this, even on a lazy summer day, is because this is progress. This is awesome.
And I want to be clear, the scale of what you're talking is I don't think anybody can wrap their head around that level of scale. Like, just let's say we were talking about, if we brought all equities on chain, we're talking about somewhere around $120 trillion of global equities. And if we brought even if we brought, right now we've got a few hundred million of equities on chain, a few hundred million, maybe, like, we did an episode with Ondo last week because they just launched their tokenized equities platform, and their guess was, like, maybe we have 150, 200 million in total right now. So you think about where that could go in the next 5 to 10 years, even if we just brought on 10% of global equities, you're talking about over 10 trillion brought on chain and managed on chain, and likely on a lot of the networks that exist today, like Ethereum, Solana, and some others. So you think the opportunity is just, it's enormous. It's absolutely enormous.
It is enormous. And there's going to be so many things that come from it. Like, all the little businesses that are attached in traditional finance today are now going to, manifest in some other form inside of crypto, inside of digital assets broadly. It's going to be really incredible. The future is bright. Yes, there might be a few winter moments along the way, but we've all lived through them. There'll be more that happens, but progress is manifest destiny. That's what this is. This is just financial manifest destiny.
And this is where the investor versus builder, founder, getting your paycheck from this is very different than the investor side, right? And I think a lot of our listeners, they don't get their paycheck from crypto. They don't work in crypto. They're here for the investment opportunity. And that is quite difficult. If you're here for the builder, you're just building and you're grinding and you don't pay attention to markets and you don't care about price. You realize that nothing, month to month, year to year, doesn't matter. A decade from now, we're talking an order of magnitude bigger than today. But if you're an investor, you feel those ups and downs much more, and you struggle with them more. And you need that fortitude and that mental strength to not get too caught up in the day-to-day, not be too influenced by the just quite honestly constant negativity on crypto Twitter that only either points out what's wrong or shows you somebody who just made $1 million, nothing else in between. If you get caught up in that, you can get in your own way. And so I just don't.
You're 100% right. I mean, you get lost in crypto Twitter, and it's also, think about this. We're inside of it, right? Like, and even the investor base that's here, like we're very focused. If you can take 2 or 3 steps back and look at it and say, wow, that is, like, the fact that you can settle instantaneously, atomically, 24/7.
That's
nobody
crazy.
Thought about that. If you're a person in the United States who wants to send money, to family in another country, you can do it instantaneously. You don't have to pay Western Union 15% or whatever it is. And sorry to any Western Union people out there. Like, these things can happen, right? Like, this is just the reality, and that's so powerful. Wait till that has a few more cycles through it, and it becomes exponential.
Yeah. It is very easy to forget the bigger picture when you're so involved in the day-to-day. Jason, absolute pleasure to get you on the show today. Thanks so much.
Thank you for having me. This was great.
Thanks so much for tuning in, everybody. We'll see you back again tomorrow. And before I let you go, check out milkroad.com, new site and discounts this week only on Milk Road Pro, where you can join a community that will help you through the ups and downs and make sure that you get the generational wealth that you're hoping to achieve. Thanks for listening, everybody. Have a great day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.